Hello everybody, welcome to Weekly Market News. Today is Monday, 2nd of November, and we are beginning the new week, which will be very rich in terms of volatility, which can be brought by US presidential election, which take place on Tuesday, and also FOMC meeting, which can also affect the markets in this week. As we are looking right now at S&P 500 and what happened at the markets last week, we were able to see quite big sell-off on US equities and also on European equities. And everything is a result of restrictions that took place around Europe. Germany has imposed a lockdown for 1 month, as well as France and as well as UK, which imposed the lockdown, which will impose the lockdown on Thursday this week. So restrictions are coming up. Obviously, the coronavirus cases are rising across the Europe. Medical system is in danger, so governments have to act accordingly. So the restrictions and the lockdowns are not that surprising, but again, we can see the markets, like I said, US markets were not that surprised with these news, but European equities, DAX and other European indices were under heavy pressure from sellers. We could have seen some big 3 selling sessions. We ended the week lowest since the end of May. Same as S&P 500, we are beginning the week with some gains. Like I said, we are expecting probably the number one fundament this week, which will be U.S. presidential election. It will take place tomorrow on Tuesday. We expect big moves on S&P 500, other stock indices, and also on U.S. dollar, which we will see how different states will publish their results. Then markets can pretty much show us the direction where they expect the presidential candidate, or which presidential candidate they will expect to win. We can see here on S&P 500 that we broke a key level of this is the red line is S&P is moving average, 100-day moving average. The blue one is 200-day moving average. These two are levels that are highly respected by the market. It was respected here 100, here the 200. Also in September, we saw a reaction to 100 moving average. So this is a quite strong support, which we will see in the coming days if we will be able to break it and rise above, or we will continue the negative sentiment, which, like I said, it's right now it's a big mystery where the stock markets will go in just 1, 2, 3 sessions, because the U.S. elections are very big fundament, and it can affect the stock market very much. If we are going to look at other events, what happened last week, we had the results of big techs, heavy techs like Apple, Amazon, Facebook. We can see here the results of technological giants, particularly Apple. The revenue grew by $65.7 billion. Overall, it was quite a negative report, because we could see we had a big jump in revenue from China. Also, we see a decrease in revenue from iPhones, which is the main source of income for Apple. But other segments and categories saw some increase in revenue. So overall mixed, but you can see the delay of iPhone 12 by 2 weeks had a big impact on the results for third quarter. Also, Facebook came with the results. They were quite positive. You can see revenue grew by 22%. They reached 2.7 billion active users. Net profit grew by 29% to 7.8 billion. So this is a very overall very positive, although report, although they signaled that fourth quarter and next year might be quite challenging because of the uncertainty by COVID and rising coronavirus cases. Also, last week we saw results of Amazon. Again, it was unprecedented, and overall they beat estimates of analysts by many percent. Amazon revenue grew by 37% to $96.1 billion. Profit $6.3 billion. The clouds, AVS, the sales grew from 8.9 to $11 billion. The profits rose. So everything in Amazon report was positive. So overall, it should push the stocks in the near term, because again, they expect the fourth quarter, which should be selling seasons. We expect Black Friday. There is also Christmas, big shopping weekends. So the company expects the growth in the next quarter to be between 112 and 121 billion USD in terms of revenue, and operating profit should be around 1 billion to 4.5 billion dollars. So those are big numbers, and Amazon is really on a good path to be the winner from this pandemic. So these are stock markets last week. If we will look at the Forex, again, this was a risk-off sentiment on the market. So demand for US dollar was seen around the all assets. So gold, Euro USD, GBP USD, they all were under pressure from surging US dollar. So this is probably the only case that what's going on here. Also, like I said, the coronavirus cases are surging not only across the Europe, where the lockdowns are imposed, but also in US, where last week we have reached more than 100,000 positive cases in one day. So we will see how this thing will be going in this week, and if the coronavirus, the pandemic might show some signs of slowing, or the trend of we can say third wave in the US will continue. So this is the Forex markets last week. Like I said, US dollar was the main driver here. So you can see big surge on US dollar on all, basically all Forex markets across the Forex market. You can see Australian dollar also under some heavy pressure. Under heavy pressure was also oil last week. We are looking at 4-hour time frame. If I'm going to show you daily time frame, right now we are on $34.50 per barrel, American WTI, and we broke to 5-month low, which is very low levels, and currently the market is experiencing a huge drop in demand, and also outlook for demand is looking quite gloomy, as well as the Libya production has increased to 800,000 barrels a day from 100,000 barrels in September. So quite a big increase. OPEC is probably not expecting these kind of moves here on the supply side. So we will probably see some deeper cuts if the negative sentiment on oil will remain at the current levels, where this oil is under heavy pressure, and right now on $34 a barrel, which is a very low price and might not be very profitable especially for US drilling companies. So oil is under pressure from supply, also from demand. So this is what's going on the commodity markets, and we can look quickly at oil, which broke $1,900 and remains under pressure still. From daily time frame, we can see that the consolidation is probably happening here more than anywhere else, and again, although we can see big risks on the markets and even from the economy, we do not expect gold to surge any much further because of mainly because of stronger US dollar, which is the main catalyst for gold in the recent date, not really the risks from the financial markets and from the economy. So gold, the outlook is that it will stay at the current levels, more or less $100, but we don't really expect, I don't expect gold to rise above $2,000. There is really no demand whatsoever right now. The bets are more on the short side than long side from speculators. Also, the US dollar plays a big part, and the risks are mainly driven the demand for US dollar, like I said. So this is the Australian dollar. Quickly, let's look at the earnings that we expect this week. Like I said, the last week was very rich for earnings, and this week should not be that interesting. Also, if we are taking in, also the U.S. presidential election, which are happening on Tuesday. But anyway, on Monday we expect PayPal after close. The rest of the week should be not that interesting. Like I said, Ferrari, Qualcomm. On Thursday we have Alibaba, Dropbox, and Uber releasing their results, and on Friday not really much anything interesting. CVS Health, we will see how they will battle the pandemic. So these are the earnings that we expect this week. Quickly, let's look at the economic calendar, what we expect this week. Like I said, we have a FOMC meeting, but the rest of the week should be quite quiet. We have employment data from New Zealand. On Wednesday, we have retail sales from New Zealand, ADP, non-farm payrolls, employment change, service sector from US on Wednesday, and on Thursday, like I said, there is a meeting of Bank of England, also FOMC, so Fed will hold its press conference, very interesting. And on Friday, we have an NFP data from US, so job market from US will reveal their data for the last month. So this will be it for today's video, Today Market. If you have any questions, leave it down in the comments under the video on YouTube or on Instagram, and I hope to see you next week.